All right, let's get right into it. If you've been watching the markets at all, you could not have missed the absolute fireworks from Corvus Pharmaceuticals, stock ticker CRVS. I mean, this is a stock that was pretty quiet for a long, long time, and then bam, it just shot up and everybody was talking about it. So, in this breakdown, we're going to pull back the curtain and figure out exactly what happened, and more importantly, what it can teach us about these kinds of explosive market moves.
It really all comes down to this one question, right? Why does a stock that's seemingly doing nothing suddenly surge like this? Is it just random luck? Is there something sketchy going on behind the scenes? Or is there a pattern here, a signal in the noise? Well, that's exactly what we're here to unpack.
Now, that massive spike in Corvus's stock, as dramatic as it was, it's not some crazy once-in-a-lifetime event. Actually, it's a classic pattern, especially in the world of biotech. See, these surges are almost never just random. They're signals. They happen when you get this perfect storm of news, momentum, and, let's be honest, a whole lot of speculation. And we're going to deconstruct exactly how that engine works.
So to really get why this stock exploded, we have to start with the company itself. What does Corvus Pharmaceuticals even do? Because understanding their business model is the absolute key to unlocking why its stock behaves in these wild ways.
Okay, here's the most important thing you need to grasp. Corvus is what we call a clinical stage biotech. So, unlike a company like Apple or Starbucks that's selling you something today, Corvus doesn't really have steady revenue or profits. Its entire value, every single penny, is tied up in the promise of the drugs it's developing. We call that its pipeline. So the market isn't looking at what the company is doing right now, it's betting on what it could become years down the road. And this right here, this comparison, really lays it all out. On the left, you've got your traditional company. Its value is based on hard numbers, sales, profits, things you can actually count. But then you look at a biotech company on the right. Its value is based on something way more abstract, pure potential. And that's why these stocks can just sit there totally dormant for ages, and then almost overnight reprice in this incredibly violent way. All it takes is one piece of new information that changes how the market sees that future. Which, of course, brings us to the big question. If these companies are basically just sleeping giants, what's the trigger? What's the spark that lights the fuse and sends the stock to the moon?
Well, it almost always comes down to one of these six things. Number one is obviously great clinical trial data, or maybe some good news from the FDA. A huge partnership with a big pharma company is another one. And, sometimes it's not even the news itself, but just the anticipation of news that gets the ball rolling. Other times, the whole biotech sector just gets hot, or you have a short squeeze, where people betting against the stock are forced to buy, which just adds fuel to the fire. But the bottom line is, it's almost always about new information.
But here's where things get really, really interesting. The surge isn't just a cold, logical reaction to some data point. Oh no, there is a massive human element at play here, and it acts like a powerful accelerant.
Because the whole story is about the future, human emotion just takes over. Optimism starts to build on itself, escalating fast. Pretty soon, the company's valuation can completely detach from any kind of financial reality. And then, the most powerful force in any momentum move kicks in, FOMO, the fear of missing out.
And you really have to let that sink in. When a stock is moving this fast, the fear of being the only one on the sidelines watching it go up can become way more powerful than any fundamental analysis. People just see the green arrow going up and they pile in, pure and simple, because they don't want to miss the party. That FOMO is what turns a small spark into an absolute inferno. All right, so now we get the mechanics and the psychology. So how do you actually approach a situation like this without getting swept up in the emotion? Let's talk about a practical framework. And remember, this is not about trying to predict the future. It's about understanding the different possibilities. I find it's always a good idea to just map out the different ways this could go. So in the bullish case for a stock like Corvus, the good news keeps coming and more money flows in. In a neutral case, maybe the news flow dries up and the stock just kind of chops around for a while. And then there's the bearish case, where some bad data comes out or the company decides to sell more shares, and the stock could fall right back to where it started. The goal isn't to pick the winner, it's to be ready for any of them. And being ready means being brutally honest about the risks. A clinical trial can fail, poof, and the gains are gone in an instant. These companies are always burning cash, so they often have to sell new shares, which dilutes your ownership. And of course, there's always the chance that the whole move was just an overreaction, just hype. A big price surge doesn't get rid of these risks. In fact, it often makes them even bigger. So if we're not guessing, what are we doing? We're learning to become pattern spotters. See, there are often signals, repeatable behaviors, that show up right before these huge price moves. And if you know what you're looking for, it can give you a real edge. The clues are often right there in front of you. You might see a huge, unusual spike in the trading volume. The stock's daily price swings might suddenly get a lot bigger. You'll see more news, more chatter on social media, and often you'll see the entire biotech sector starting to heat up. You can think of these like the early tremors before the earthquake hits.
And just as critical is knowing the traps to avoid. Seriously, the biggest mistakes people make are chasing a stock after it's already doubled, completely ignoring the risk that the company will sell more shares, confusing short-term momentum for a long-term investment, and, of course, betting the house on one of these high-risk plays.
At the end of the day, in a sector as volatile as this one, protecting the money you have is just as important as trying to make more. Risk management isn't just a good idea, it's everything.
Okay, let's zoom out for a second, because the story of Corvus isn't just about one little biotech stock. It's a fantastic lesson in how today's markets actually function.
What we saw with Corvus is a textbook example of how markets price the future. They reward what a company could be, not just what it is today. This is the whole idea of optionality. It's the value of a potential future outcome that isn't guaranteed, and modern markets are willing to pay a very high price for that option. And look, this isn't just a biotech thing. You see these exact same dynamics play out all over the place. Think about emerging tech or small-cap energy exploration companies, any industry that's built on a big promise for the future. This pattern of lying dormant and then exploding on new information is universal. Which brings us to the final and I think the most important takeaway from all of this. When you see a stock like Corvus going vertical, our first instinct, our gut reaction is to ask, is it going to go higher? But honestly, that's the wrong question. It's a question based on hope and FOMO, not on clear-headed analysis.
Here's a much more powerful question to start with. What fundamentally changed? What was the actual catalyst? Was it real, verifiable news? A new piece of data? An FDA decision? Pinpointing that specific driver is your first, most critical step to figuring out if this move has any real substance behind it.
Then, once you know it changed, the next question is this news story legit? Is the narrative that's pushing the stock higher actually backed up by credible evidence? Is this a logical leap to future value? Or is it just a whole lot of hype and chatter? This is how you separate a true signal from all the market noise. And last, the single most important question of all, the one you have to ask yourself. What am I willing to risk to be a part of this? Knowing your downside, deciding on your exit plan before you even get in, and controlling your position size, that's what separates disciplined investing from just gambling. So by asking these three questions, what changed? Is the story real? And what's my risk? You can navigate any of these wild market breakouts with clarity and with confidence.